Welcome back. Up next, Forum Daily's market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Seema. Hello, everyone, and welcome to your weekly market recap. I am Catherine Murray. Well, we have seen some major swings in the market this week. We started the week off on a down note with markets really selling off across the board, only to see some major rebounds Tuesday and Wednesday. Now, of course, Wednesday was the big news item this week with the U.S. Federal Reserve raising rates by 25 basis points. And the market took that in stride and continued its rebound higher. Now, the rationale perhaps for the broader market uptick is that we had oversold conditions. We had seen quite a bit of selling pressure over the past week or so, and also in fact since the beginning of the year. Also, of course, the rate hike was expected and perhaps priced into the market. We've also seen that cash positions by big money managers were at elevated levels, greater than 5%. And also, we've heard some signs that progress had been made between Ukraine and Russia, although Russia has denied those comments. So a few positives to help with the rebound, but there's certainly still a lot of uncertainty to digest. So let's take a look at the U.S. Federal Reserve. The statement really was hawkish. This is U.S. Fed Chair Jerome Powell. He did say, however, that they will be raising rates 7 times in 2022. He does expect inflation to decline in 2022 to have a 4 handle. He also said that the U.S. economy is very strong, in fact, strong enough to withstand raising rates. He did, however, downgrade the growth forecast from 4% to 2%. He did, however, say that household balance sheets are very strong and that the labor market is very strong. He did also give himself quite a bit of optionality, meaning they are expecting to raise rates 7 times in total this year, but it doesn't have to be at every meeting. So in other words, he's got some flexibility, some optionality, and that's what equity markets like. Interestingly, though, and when we look at the market, we did see, in fact, tech shares surging, growth outperformed. Oil retreated. That probably also helped the equity markets over the past couple of days as well. Remember, there's so much concern about rising oil prices choking off demand and therefore the growth story. Interestingly, though, the bond market has a bit of a different interpretation to what we heard from U.S. Fed Chair Jerome Powell yesterday. In other words, they are basically saying that if, in fact, Fed Chair Jerome Powell raises rates 7 times, they're expecting a much slower economy. And interestingly, on that note, we've seen a number of bond issuance when companies want to go out and issue bonds to use that cash to perhaps grow or keep in their bank account. We've seen a number of those bond issuance being canceled. Tesla, for one, canceled their $1 billion bond issuance. And now, Tesla aside, when companies decide to cancel bond issuance, it often means that they don't like the current rate environment and they think it will be temporary. You obviously want to issue when rates are lower. So that's an interesting aside. Now, away from that, and speaking of rates, we're seeing central bankers around the world really start to increase rates. BOE, the Bank of England, did raise rates today. And recall, they're doing this to try to combat the red hot inflation that we're seeing. Let's bring this home to Canada, the BOC. We've actually seen the biggest increase in inflation since 1991, coming in at 5.7%. That was ahead of expectations. Clearly, the Ukraine-Russia war and conflict is sending oil and ag products so high. Again, these central bankers around the world trying to combat the pricing that we're seeing. Adding potentially to the pressure in the market, supply chain disruptions and perhaps more inflation to come. CP and their workers are very far apart in reaching agreement. CP issuing a 72-hour notice to Teamsters Canada, warning of a lockout of employees by Sunday if they fail to reach an agreement. So something else to watch there as well in the mix. Interesting as well, from a stock perspective, take a look at Nutrien. NTR as a ticker there, trades in Canada. They did announce that they will be increasing their production of potash, given the uncertainty of what we're seeing in Europe. Today, we are seeing a rebound in the price of WTI up by over 5%. Canadian dollar is higher versus the US dollar. Perhaps the US Fed Chair Jerome Powell wasn't as hawkish as some people were expecting, even though it was a hawkish takeaway. And circling back here a little bit, the US economic data is in fact strong. Housing data came in better than expected, Philly Fed index better, jobless claims better as well. Aside from the Fed and inflation, the biggest news in the stock market this week was really what's going on in China. We saw China stocks surge, tech stocks in China surge. These are the ADRs that are listed in the United States. because the government there vowed to try to stabilize tech shares that are listed in the United States, removing some of the crackdown, that hard crackdown that they've had on the tech companies. Nima, I'll leave it there. Back to you.
What a busy week, Catherine. Thanks for that. For more analysis and news on the markets, be sure to tune in to Catherine Murray on The Buck Stops Here. All right, stay with us. Up next, news from around the world, of course, only on Forum Daily. We'll be right back shortly.